Good afternoon and welcome to the Wall Street Crossover Show, sponsored by Admiral Markets and with their market commentator, Darren Sinden.
Good afternoon, Zach.
Good afternoon. Nice dark afternoon in
it's a dreadful day.
in the city of London.
Hard to believe it's August, and I was watching a broadcast from the US, and they were crowing about what a lovely summer it's been in New York, and that was making me feel very jealous indeed.
Well, they had such a horrible winter that they got a bit of a payback there. But in terms of the financial markets, we had our daily currency fix from the People's Bank of China.
Yes, we have.
They can't get out of the limelight. They just love it there, don't they?
Well, yeah, they were in it square in the centre yesterday, and the Bank of China had a rare press conference and actually deigned to explain its actions, or try to explain its actions to the wider markets. Whether you believe what they said or not is a moot point. Personally, as I wrote in an article, I think that what they said is akin to a vote of confidence from the chairman of a football club for the manager
Or for the doctor, even.
Yeah, absolutely.
But the situation there is that they said, I mean, the main problem is that they said it was a one-off devaluation earlier in the week. And then they, rather like London buses, another couple of devaluations followed. Yeah,
so we're not going to devalue by 10%, but by the way, we are lowering the reference rate by another 1.1% today to make it sort of 4.4% in 3 days. So, yeah.
And I mean, overall, do you think they know what they're doing, or they think they know what they're doing, or does it really matter?
Well, it doesn't matter from a practical point of view because the end result's the same. Yeah. Do they know what they're doing? They're trying very hard to manage. Somebody said it was like riding the tiger. They're trying to manage a mad economy, which can be quite wild. It probably suits their book to get the yuan lower, and if it allows the currency to move towards full and free convertibility, that might allow them in turn to see the yuan in the special drawing rights basket of the IMF, which is probably what the ultimate goal is. But if it helps the economy in the interim, then they'll probably be very happy with that as well.
Okay, well, let's go for the data released over the European session.
Okay, well, we've covered the People's Bank of China's actions in that opening section, so let's move straight on to inflation numbers in Germany, and this is the Harmonised Index of Consumer Prices, HICP. This is the ECB's preferred measure of inflation. This is the figure, first of all, for July on a month-on-month basis, came in at plus 0.3, bang in line with forecasts of plus 0.3, and indeed bang in line with the prior read of plus 0.3. Then we move to the same measure, but on a year-on-year basis, again a positive number, plus 0.1%, again in line with forecast, plus 0.1%, and again conveniently exactly the same as the prior month, plus 0.1%. What must be of some concern, though, to the ECB is that there's no sign of stimulation of growth in the economy. Yes, there is modest inflation, but it's not trending higher. It's flatlining, and they will want the exact opposite of that.
And does that mean that probably we'll see further action in September, October? Also, the euro seems to have strengthened as well, which takes inflation the other way. So we would expect something to happen. Yeah,
I think particularly if the China reason we just talked about continues, then I wouldn't surprise me at all if to the latter part of the year the ECB upped the scale and frequency, or momentum, shall we say, in their QE plan. And then staying in Europe, and a different measure of inflation, this time consumer price index for France, July again, the figure year on year, plus 0.2%. So lower than a forecast plus 0.3% and the prior read of plus 0.3%. But perhaps more concerning still, the month-on-month number on this measure is actually negative, minus 0.4%. Slightly better, it must be said, than the forecast of minus 0.5, but still well ahead of the prior read of minus 0.1. So there are deflationary pressures in France. Whether you choose to follow that measure or not, you can't really ignore the direction that it's trending in.
Bad message. Okay, right, onto the European movers.
Okay, well, a couple of stocks that have, for the periphery of Europe to some extent, have taken my eye. First of all, Aon, and I apologise for my Dutch pronunciation there, AGN in Amsterdam, a large insurance and pension provider, €6.29, down around 5.36%. Profits were ahead of the figures for the comparable period in 2014, but they were below analyst forecasts at the Dutch insurer. They posted profits of 350 million euros versus the 343 million for the same time in 2014, but the forecast was for a much higher figure at 540 million euros. A company has a big interest in the States. It owns a business there called Transamerica. It has raised its dividend from 11 euro cents to 12 euro cents, but I think the market felt that was a bit of a paltry exercise, and it's voted accordingly. And then just moving further north from Holland to Denmark, AP Møller-Mærsk, ticker Maersk B, one of the largest shipping companies in the world, trading around 12,720 Danish kroner, up around 6.8% this morning. Again, it reported numbers. Profits were lower versus 2014, but they beat expectations despite weak freight rates and low oil prices, and they came in at $507 million versus a forecast of 482 million, so a decent margin ahead. The company also announced a $1 billion share buyback, and it seems that's the way to get the market on side.
A chunky move. I have to say I would have chosen companies which are easier to pronounce. But
I don't mind the challenge.
But you're a brave man. Okay, well, next up, let's go for the M&A rumours and movers.
Okay, well, it's a deal wholly made and delivered in the US. Fidelity National Info Services, that's ticker FIS in the US, is to buy SunGard Data Systems for around $9.25 billion in stock and cash. That figure does include some debt as well. SunGard is a maker of financial software and systems, and interestingly, it recently filed for its own IPO, but it hasn't got that far. So SunGard had been sort of a company with a slightly checkered history. It was the subject of one of the world's largest leveraged buyouts back in 2005. At that time, this was a massive deal. 7 PE firms cooperated jointly and acquired the business for $11.5 billion in what was termed a club deal. Apparently that was quite popular back in the day.
Money-losing club, I think that one.
Well, I think it possibly was. They have sold it for less. They have taken some money out though. They sold a business for about $1.8 billion, and they were able to take around $700 million in cash over the lifetime of owning it. Nonetheless, you have to feel that in that time it hasn't really increased in value.
So Fidelity may have done a good deal, in other words.
I think so. They already provide banking and payment software systems in North America and elsewhere, and the combined vehicle, if I can even say that, will share 55,000 employees across 100 countries and revenues of around 9.2 billion. As I say, Fidelity trading 70.75 as of the close last night, up 8.73%, and the market obviously really thinks that this is a good deal.
Okay, well, let's go for the US data points.
Again, a slightly thin calendar from the US this week, but first of all, we've got weekly jobless claims obviously taking on ever more importance as the Fed wants to focus on the labour market as one of the keys that might drive an interest rate change. The forecast for today, 270,000 new claims versus the prior read of 270,000 new claims. A weaker number, i.e. a lower number of new claims would probably spur the hand of the hawks, and a higher number above 270 would be good for the doves as far as US interest rates are concerned. And then perhaps the most interesting figure today, retail sales for July, forecast to come in at 0.5% or plus 0.5% as against the prior read of minus 0.3%. The year-on-year trend in this number has been a decline since July 2014. What is interesting to note as well is that Kohl's, which is the third largest US department store, produced numbers just before we came on air, and they missed on all counts and lowered guidance, and they were down around 5% pre-market. So it'd be interesting to see how, if that's reflected in the wider community of retail sales.
So basically, if we have a negative figure, it would really take out the interest rate agenda or hurt the interest rate rising.
I think it would, yes, but particularly if it's a miss by a country mile, yeah.
Right. Okay. Well, let's go on to the movers and the levels for the day.
Okay. Pre-market movers then. Sprint Corporation, ticker S in the States. $4.20 up $7.97. Now, we've talked about this in the past. It's one of America's bigger telecom operators, but it is struggling and burning cash. It's owned pretty much outright by Japanese company SoftBank, and yesterday they added to their holding, spent another $87 million buying stock and took their stake to 80%. It's about a 1% rise.
Averaging down.
Yeah, I guess what the market's seen is they're up, nearly 8%. They're taking that as a vote of confidence from SoftBank. Interestingly, though, they said they weren't looking to sell out, which I think there'd also been quite a few people hoping that there could be a deal done with Sprint Corp saying perhaps T-Mobile. Anyway, for the moment, the market likes what it sees, prefers to go with the vote of confidence idea, and that's why the stock's higher. And then Cisco Systems, once the darling of the internet sector, but often overlooked these days, but ticker CSCO provides all the routing and backbone infrastructure for much of the internet. They've got a new CEO, and he gave his debut numbers last night. Not really much of his work, I don't think, this, but he's just inherited this. They beat on earnings per share, delivering 59 cents versus 56 cents. That was forecast, and revenues came in at 1.8 billion versus 1.265 billion that was forecast. So the guidance was that was offered, which is rare for Cisco to offer any guidance, was in line with forecasts, and so the market said it was a little dull, but there was nothing kind of exceptional, no kitchen sinking as sometimes you get when a new CEO takes over. So they're up.
That's a big plus in a way.
Yeah, they're up almost 3.5%. And then in terms of levels to watch today, there are not too many changes. There's lots of volatility, but not too much outright change to the levels. As far as FTSE is concerned, we're looking at 65.70 on the downside, plays 66.63 on the upside. For the DAX, 11,055 now is the downside level, plays 11,162 to the upside. In the S&P, 2076 plays 2105. So despite that big range yesterday, we've not really changed our view there at all. And the Dow, an even wider range yesterday. I think it traded down over 250 points and then rallied to finish up on the day, and has posted something that's akin to a hammer in the candle chart. We'll see if that follows through. But 17,350 on the downside, plays 17,470 on the upside. So again, not much change to the range there, despite the volatility yesterday. In euro dollar, we're now looking at 111.05 on the downside, and we were testing to and briefly through there just before we came on air. Plays 111.36 to the upside. Aussie dollar, US dollar was very, very volatile overnight, but seems to have calmed down slightly. And again, there's not much, despite the volatility, there's not much differentiation from yesterday's levels. 73.21 now is the downside level, plays 73.64 on the upside. If anything, we've been able to slightly tighten the range there. Dollar yen is quite curious, given what's going on in the region there, but it remains relatively stable. 124.20 is the downside level. Still looking for it to try and take out 124.62 and beyond that 125.00. And cable, a little bit better on against the dollar, really, from dollar weakness more than cable strength, I think. So 156.00 is our downside level, plays 156.35 to the upside this afternoon.
Right, so China reverberations, but in the end we're sort of back where we were before the whole thing started.
Near enough, yeah.
Right, okay, well that's it for the Wall Street Crossover Show today with Darren Sinden, market commentator at Admiral Markets. We'll be back again at the same time tomorrow.